The next energy solution provider I'm going to talk about is iron. So iron has gone up roughly up to 55% in the last 6 months. So what iron does is that it is a vertically integrated data center operator that is running on renewable power. So iron owns the computing hardware, they own the electrical infrastructure, they own the buildings, so they can lease those infrastructure to end users. Perhaps you're familiar with Iris. So Iris Energy, that was a former name of Iron, but it's now Iron. And yeah, they started as Bitcoin miners, but I mean, you have all this infrastructure. Why don't we repurpose it for AI integration for data center solutions? So it's pivoting from pure play crypto mining into AI cloud services. And its real asset is a portfolio of power dense, grid connected sites. Exactly what is needed right now. We need energy, energy. And guess what? Iron has roughly 6 gigawatt power land bank that is contracted to NVIDIA. You know, yeah, so Iron, and according to analysts, they said Iron has a potential. I think currently is around 47 dollars per share at the time of recording this. So it's projected that Iron can go as much as $79 by the end of the year. So that means like $30 increase. So if you buy the shares now, there's a potential upside of up to $79 per share before the end of the year. So don't quote me. I'm not a financial advisor. Just telling you information that is already out on the internet. Then there is First Solar, which is up roughly about 50% in the last 6 months. So what First Solar does is to provide solar panels, right? Alternative source, renewable energy. Okay, so solar solutions for data centers. They produce thin film cadmium telluride modules in Ohio, so data centers in Ohio, Alabama, Louisiana, and they are projected to increase their capacity up to 17 gigawatts of energy. So why does this matter? Utility scale solar has become one of the fastest ways to add generation for data centers. And there is a tariffs on imported panels. So because there is tariff on imported panels, solar panels, that means customers they will be forced to trade with First Solar because they are local manufacturing company for necessary ingredients, essential components of solar energy distribution. So they are going to be in high demand. They're going to be in high demand. So you might want to check them out. Um, all right. So one thing to note is that these stocks are very volatile. So it's been up 30% in the last 90 days, but recently cooled. It dropped around 8% in a month. All right. So just keep your eye on the ball if you are considering putting some money into First Solar. Then there is Eaton. So Eaton is up 25% in the last 6 months. And what Eaton does is that you know provides connection for data centers, right? The wiring connection for data centers is provided for by Eaton. There's partnership with NVIDIA, all right? So yeah, revenue has gone up 42% surge, $7.5 billion. Yeah. So Eaton is another great player in the energy industry. So you might want to check them out as well. All right. So One cool thing about Ethereum is that Ethereum is not as volatile as Nebius, as Bloom Energy, as First Solar. It's not as volatile. So the possibility of parabolic climb and you know night falling trend is very minimal. So if you want to bank on a long-term energy provider for hyperscalers, yeah, you can consider it. That might be something that I'm going to keep on my radar as well. There's also Vistra. So Vistra is the first name that bucks the increase story. Vistra is roughly flat, modestly over 6 months. That's approximately 15% uh, increase. So not so much of growth for Vistra, but there's a long-term projection, right? So they have so key catalyst that is driving Vistra is the fact that they have partnership with Meta, with AWS, acquiring 5,500 megawatt conjectures gas acquisition. Yeah, so those are the things that are powering the momentum. So it's like you are buying into the future if you are investing in Vistra. So uh, what Vistra does is to sell firm, right? It sells the firm, it sells round the clock baseload power to hyperscalers, which is one of the most valuable type of supply for data centers. So there's 20-year power purchase agreements totaling 3,800 megawatts with Meta, 5,500 megawatts with Concentrix Gas. There's like $10 billion AI infrastructure venture. So there's a lot that is pushing the momentum. So this is a good time to buy Vistra because once the stock take off, you won't be able to stop it. Just look at Bloom Energy, David, see how far they have gone. So once these guys take off, you won't be able to stop them. There's also Constellation Energy. So Constellation Energy is yeah, not really shown some appreciable growth, but I bet you Constellation Energy is a connecting tissue for many of these cloud service providers, hyperscalers, GPU providers. So what Constellation Energy does is that it operates the largest nuclear fleet here in the United States. It produces clean, around-the-clock electricity, roughly doubles its quarterly revenue after closing the Calpine acquisition in early 2026. So this is playing like Vistra. You may not really see the growth now, but once they take off, you can't stop them. So one thing with data center owners, data center uh, buildings, so they want to have carbon-free nuclear power directly on long-term contracts, and Constellation has the most of it to sell. You hear things like carbon footprint, carbon footprint. So Constellation provide that service. So one of those premium deals includes the 3 Mile Island restart, right? So they are, yeah, so they have been very big on providing clean energy for data centers. So for businesses that are big on clean energy, they are partnering aggressively with Constellation Energy. So ultimately, here's just some things to note as you are making your decisions. The compute and fuel cell names, Bloom Energy, Nebius, Iron, they swat on explosive revenue and index inclusions, but they are very volatile, right? So just pay attention to that. Then for nuclear generators like Constellation, Vistra, they ran very high in 2025 and then they cooled in 2026. Even as the contracts increased, but it doesn't mean they're not a good stock to buy right now. I told you to look up the difference between P ratio and PEG ratio. So you might want to find out what is the P ratio of all of these ticker symbols we have shared and see which one might be convenient to invest in. So the race is now for electricity. So AI race is quietly becoming a race for power and not chips. And the market is still sorting out how to price it. So if you want to join the trade, so if you don't want to, if you maybe you've had heavy investment in semiconductors and chips, and you're looking for other ways to diversify in the AI trade, then you might want to look at some of these energy stocks that are aligned with the AI trade. All right, so see you on the next one. Take care.